Hello, and welcome to the Baird Trust Equity Income Fourth Quarter Portfolio Recap. My name is John Watkins, and I am a co-portfolio manager on the strategy. Jumping right into performance, the table at the top of this slide shows our performance track record. A strong fourth quarter capped off a very good year for the portfolio. In the quarter, our portfolio was up 11.7% gross of fees and 11.3% net of all fees, which was well ahead of the 7.8% increase in the Russell 1000 value. And then for the full year, our portfolio was up 28.9% gross and 27.2% net compared to the Russell 1000 value's 25.2% gain and the S&P's 28.7% gain. We are thrilled with our investment performance both in the quarter and for 2021, but at the end of the day, our focus is not on one-year periods. We are trying to compound your assets at an attractive rate over many years, while also providing substantial income along the way. So with this long-term goal, we believe it's extremely important to not get too focused on short-term investment performance, good or bad, and lose sight of that ultimate long-term goal. On the bottom half of this slide, we've listed the top and bottom contributors for both Q4 and the one-year period. Moving on, this slide shows portfolio changes that we've made over the past year. We made one change to the portfolio in November. We eliminated our holding in Northern Trust. So Northern Trust business performance has been below our expectations. So we decided to move on and allocate the capital to better ideas. With that capital, we added to our holdings in Johnson & Johnson and in Omnicom. Johnson & Johnson is one of the leading healthcare companies in the world, has been a long time holding in this portfolio. When we decided to eliminate Northern Trust, J&J was trading at a substantial discount to our estimate of its intrinsic value, which afforded us an attractive opportunity to add to the position. And at the time of the trade, it had a 2.6% yield and had increased its dividend for 60 consecutive years. Omnicom owns dozens of ad agencies and is run by a CEO who we believe is one of the best in the business. The company's business struggled in 2020, but it rebounded this year. However, the stock price remained depressed, so we were able to add to it at a price well below our estimate of intrinsic value and at an attractive 4.1% dividend yield. So while trading activity was relatively muted in 2021, our research activities remained full steam ahead. We studied many new businesses, we added several companies to our watch list, and we stand ready to act when future opportunities present themselves. On the left-hand side of this slide is the list of the 5 portfolio holdings that increased their dividend payments in Q4. Below that, we also note that Progressive paid a special dividend in the quarter, and one holding, Union Pacific, actually increased their dividend twice in 2021. The table on the right shows the dividend characteristics of our equity income portfolio compared to our benchmark, the Russell 1000 value, as well as to the S&P 500. So as a reminder, 2 of our 3 portfolio objectives are to achieve a higher dividend yield and faster dividend growth than both of these indices. As you can see on the table, as of December 31st, we are achieving these objectives. Our portfolio has a current yield that is greater than both, as well as dividend growth track record that is superior to that of both indices. Unlike many dividend managers, we believe that dividend growth is critical to our long-term investment success. Especially in today's world of elevated inflation, a stream of income that is growing rapidly is much more valuable than one that is growing slowly or staying flat, even if the latter provides more current income today. Finally, just a few big picture comments on the portfolio and our outlook. The past 2 years have seen very strong equity market returns, which has surprised many investors given the backdrop of a global pandemic. We think that the past 2 years should really serve as an emphatic reminder to all investors that future events and the stock market's reaction to those events are unknowable. even with near perfect knowledge back in January of 2020 of all that would transpire over the coming 2 years, it's hard to imagine anyone even predicting positive equity returns, let alone the more than 50% increase in the S&P 500 that we have seen over that time period. We know we cannot predict the future, and we are also reasonably sure that the future will contain surprises that are hard to imagine today. That is why we stay laser focused on doing what we do best, finding great businesses with attractive dividend characteristics that are run by gifted leaders at compelling prices, and with the intention to own them for many years into the future. That does it for the Q4 portfolio recap. We look forward to reporting our Q1 results to you in April. Thank you so much for your time.